Hi, this is Simon with Trade and Perform Coaching, going over the trade review for, let's see, today is Thursday, December 5th, 2013, and it is a little on the late side, but I'm going to get this out just the same. It's a bit cold here, and we are in the process of icing over. So in the market today, when we came in, we had discussed a couple of things. First of all, the concept that this is a pullback in the is simply a pullback in the context of a larger trend up, as opposed to a breakdown in the market. The other concept we discussed is that we had a very wide range yesterday, and that we had expected a balanced day and an inside day, meaning the low of today and the high today would be within the high and low of yesterday's range. We had discussed the idea of, in the morning meeting, of looking for longs lower and looking for shorts higher. And there is a zone missing on this chart. I had somehow managed to delete. So let me add that here real quick. Okay, so we are now back, and we have the magical 1789 to 1790 zone. So with those concepts, the other thing that we discussed was that yesterday, with the range increasing, I'd want a wider rotation than I normally take for majority of my trades. So out of the gate, and I don't think I tweeted this publicly, I did put it out, I believe, over my private Twitter feed to my coaching clients. But we basically had half gap and then gap fill. And I was mentioning that this 1790, that I wouldn't lean too strongly against it, or that it would be considered an aggressive trade if I did. When we got up to half gap, the third concept that we were discussing on this particular day was the NASDAQ and the strength of the NASDAQ. And what I had noticed in particular, if you look, while ES was setting new lows pre-market, NASDAQ, and I'll pull this over for you. I'll pull the entire screen over here. And what you'll see here is that NASDAQ, when we were pre-market and we started to get the selling pressure, we were well off of Globex lows, right? So immediately I knew that NASDAQ had some strength to it, and I wanted to key off of ES in terms of making my trading decisions, right? The other thing, and this is the approximately the 8:30 open, right? The other thing that I noticed, if we look at that same time frame, right, on ES, we will see that pre-market, as we were coming in, this was, so what you'll see was that this area right here was essentially London low, right before we got into the US session. And as you can tell, we were already trading below essentially London low or Globex lows coming into the open. So I knew that ES was weaker, and I'd want to key off of NQ to see if it could break or not. So those were some of the factors, right? And then if you add in additionally that we had a very, very low tick reading, a strong negative tick reading out of the gate. I believe it was 800 or 900. So when you add all of those pieces together, first of all, we didn't want to short into the hole, right? And we were also looking for a move higher. And the last piece that we were looking for here was that we wanted ES to make a move below its Globex lows, right? And it did that right here. 17 coming into the open, 1786 and a quarter was the lows. I had mentioned the prior day that it just made a tick lower before sellers got trapped, and that happened again. This time they got 2 ticks in below the low, and then sellers were trapped with a move to the upside. Instead of trying to guess whether that downside was going to hold or whether NQ would be able to pull it up, instead what I was looking for was half gap. And if you measure the distance from the close on, let's see, Wednesday, and then you look at the low from the first 5 minutes, right? Half gap ended up being right here. So let me expand that for you here for a second so you can see that. This was a very aggressive trade that I took to the downside and was able to capture 2 points very quickly. And I was hoping for, my hope was that we were going to get a move into initial resistance, and the plan was to take a long from initial support, and the plan was to take a trade from initial support And actually what I thought we could do is push it all the way up into the white zone. In addition, the plan had clearly stated, and again, this is on the blog post right below here, that I wanted to take on a good rotation up into the white zone, the first test into the white zone, I was going to take it to the short side. And so if you'll look, as we came up into the positive ticks, if you pull up a tick chart, which I'm not going to do right now, as we pushed up here, right, this is a move from essentially we're trading at 1785, right, up into 1792. I was talking about looking for a 7-point rotation pre-market. I do adjust the rotations that I'm looking for based on the price action of the prior day. We were looking for a 7-point rotation. That took us right in. I was hoping for a long out of the gate here into this area. I was hoping for a push a little bit further in. 1784 was what I was looking for. I didn't get it on this first push in. However, I did take the long on NASDAQ, and it's because NASDAQ was unable to get below its Globex lows, and it was the stronger of the two sisters per se. So I didn't get filled on ES. I did get filled on NQ, and I had quite a nice trade to the upside. In addition, so we took a long, I had a short here, essentially a long right here was in NQ, but the location was the same, and then a short right here. So all three of those trades for me were planned, right? Even if you weren't an aggressive trader, right? You had moves here. This particular move was done on tick divergence. Let me show you right here with an ellipse. Easy enough. This move, if you pull up a 1-minute tick chart or even a 5-minute tick chart, you'll see the tick divergence here. And this move up into this high was also on tick divergence. So you had multiple things supporting your move into that area, supporting taking a trade into those areas, right? Now, I was hoping for a push lower. I was short. I had my last scale still sitting here, and I just couldn't get that last push down. And I dragged my stop all the way down, and they came in and tagged me out. So I'm a bit tired. What I wanted to say is it's very important if you're trying to learn how to trade or you want to trade profitably, right? There are several key factors in my success today. First of all, almost all my trades were planned before the market had opened. I had an idea of what I was looking for and my specific trade location. The other issue, a lot of people are asking, well, what about the second and third time in, right? If you'll go look at the zones, each time that the zone gets penetrated, this entire area is the zone from the bottom to the top, right? But each time we push into a zone, that zone becomes weaker. It loses some of its elasticity, and the odds of a rotation higher decrease significantly, which is generally speaking why, unless I have tick divergence, which I had down here, but I did not take it. I suppose I should have. I missed the trade. I have, I'm trading 2 or 3 markets at one time, and sometimes I miss small things. I missed the tick divergence down here, but by the time we get in here, right, and it's late afternoon, this is 1, 2, really 3, 4th trip into the zone. And trying to take the trade long out of here, right, especially in the last hour when we're trading near the lows of the day, this is a high risk trade. I realize they did try to push it up and out, but it was quite easy, particularly if you were undisciplined. It would have been quite easy to lose money in this area. In addition, if you look, right, from a psychological standpoint, look at the trend here. Okay, instead of having an uptrend to work with like you have the last couple of days, right, if you'll take a look from this peak down, put a big fat weight on that, right, you're fighting against this downtrend. And what I'd want to see, right, if I were wanting to be secure and looking for longs, right, I'd want to see us get up over, really significantly over this, preferably 1792, 93, and then get a good retrace back in and do a backside test of this downtrend, or look for some kind of entry above this downtrend line, right? That'll let me know that we're perhaps starting a new uptrend and we're going to make a new assault on the 1800 and then on up into 1805 and finally into the 1812 area, right? So if you're going into the last hour, there's a lot of things that are working against you psychologically in this area. And what I'm talking about specifically is this entire area for the last hour Okay, so if you called it right, okay, and you nailed this low, first of all, you were trading outside of the zone and below the lows that were held all day going into the last hour. True, they did bring it back in. It turned out to be a head fake to the downside, but you don't know that at the time, and you're working against, one of the things you're working against in this last hour is a time crunch. And a lot of people who are making decisions that are difficult to maintain, and I want to address this because people ask me about this quite often. I don't like taking trades there because I have very little time to let the trade work in my advantage. Algorithmic trading increases dramatically in the last hour. 70% of all algorithmic trades take place in the last hour of the day. Look at the whips, right? Look at how clean the trades were here. In, out, right? In, out, swift rejection. Look at the wiggles that you're having to contend with in the last, really all afternoon, right? The wiggles are getting significantly bigger. Whether you are long or short, this is difficult, right? You don't know here if we're going to rip up and get caught like we did yesterday. You don't know if we're going to rip down and break down like we had most of last week and earlier this week. When you expose yourself to that kind of unknowing, your fear will naturally rise. There's not much you can do about it. Your adrenaline levels will rise and your decision-making qualities will go down. And unless you're a very, very experienced trader, it's very difficult to get this done accurately. If those of you who are doing this regularly and you're looking at your numbers and you're saying, hey, I'm hitting 7 out of 10 or 8 out of 10 in the last hour, then this is not for you, right? The message isn't for you. But the majority of people, including myself, I struggle most days in the last hour. Occasionally I get a really clean setup and I take it. But the easy money, all the easy money is usually made for me before 11 a.m. All this other stuff, yeah, it's nice if you can get it, but it gets slow, it gets meandering, it's harder to tell direction. So what I would suggest, and it's just a suggestion, right, is that you focus your efforts, particularly if you're a struggling trader, in the first 2 or 3 hours of the day. Get it when there's the most participants. You have both Europe and you have US participating. The moves are crisper and the breaks are cleaner. The other thing that I would strongly suggest is when we're consolidating, right, and we're going through balance, what works when the market's ripping up, right, is buying near the open and you assume that we're going to just continue ripping higher, right? But that works just the opposite in a balanced market, right? Let's say you'd bought the open right here. You got to move down, rip up. Most people would not survive this dip down if they bought the open, right? Most of us are trading with 1 or 2 point stop. Some of us with a 3 point stop. But based on the number of people I've spoken to, 3 point stops for most individual traders, small accounts, meaning less than $100,000, it's pretty rare to run across someone who has less than a 3 point stop whose time frame is on the day trading time frame, right? By the same token, this really sets you up for failure because not only did you take a stop, then you do see it rip up, right? And then what do you want to do? You want to look for a pullback, right? You think, oh, it's going to hold this support level and then rip to new highs. And what does it do? It comes down and rips to new lows. You have to be flexible enough and be able to read the market to see when there's a shift coming, when we're coming what's called out of balance and into balance. And there's lots of ways to learn about that. If you'd like to know, you can email me or text me, and I'll be happy to send you a book or two you can read on it. If you don't want to go through some type of course, and there's multiple courses out there outside of my coaching that teach those concepts and those ideas, but they're very important. Anyways, I'm tired. That's all I got. Tomorrow's economic data is big, and I would expect really quite a volatile market, and I'm going to be very patient on my entries tomorrow. And for those of you who haven't traded, the non-farm payrolls day can be really, really brutal on trading accounts. Make sure you've got great trade location. Make sure you're being very patient. Respect your stops, and be prepared for the possibility of getting stopped due to the high amount of volatility. Usually the first 2 hours, in my experience, are very difficult. So I haven't decided how I'll handle it just yet, but I assure you I will make that decision before the open, and we'll see what happens. 7:30 should be very interesting tomorrow. Anyways, everyone have a great night. This is Simon with Trade and Perform Coaching. I hope everyone banked big bucks today, and look forward to doing it again tomorrow. Good night.